Assalamu alaikum. The topic that we are going to do today is documents that are involved in accounting. There are a total of 6 documents that we are going to do. We are going to learn about their format, their usage, and how they are involved in accounting. So in this video we are going to do the first document, which is an invoice, and then I will be posting separate videos for each of the documents that are used. Now, what are documents in the first place? All the entries that are done in the accounting records of a business, they are made using the business documents. So these documents are very important because they act as a proof of the transactions that are taking place. So for each of the transactions that has taken place, there has to be some kind of a document involved, and then we record these transactions in the accounting books using the documents only. So you see, there has to be a proof of everything that you record, right? So that is why these accounting documents are involved in the transactions that you do. So both documents received. So sometimes you're going to receive documents from other people, and sometimes you're going to issue documents to other people as well. So both your documents received and the documents that you issue are going to be used in your business, right? So let's move on and let's have a look at the first document. Now, the first document that we are going to learn about is an invoice. An invoice basically can also be called a bill, right? So you when you go to a shop, a retail outlet, you buy something, then obviously the shopkeeper gives you an invoice or a bill. So that invoice is really important. Now, when a business sells goods on credit, it will issue an invoice to the purchaser. So basically this document is given by the seller to the purchaser or buyer, right? Why? Because this is obviously a proof that the seller has sold goods to the buyer. So you see, it is only issued when credit sales have taken place. So I am going to issue an invoice to the buyer only when I have sold goods on credit, because when I sell on cash, there is a separate document that is going to be involved. We are going to learn about that in a separate video. But an invoice is when I sell goods on credit only, right? Now, each business has its own style of invoice. So for every business, the invoice is going to be different, right? So when you go to Carrefour, obviously the invoice is a little different. When you go to Junaid Jamshed, for example, the invoice is different. So any business you can take the example of, all the businesses have different types of invoices, but usually they contain this information only. So they contain the name and address of the supplier. Obviously they are going to contain that, the invoices. The name and address of the customer, so the invoice is going to contain that as well. The date of the transaction and full details, as to what quantity is going to be sold or is sold, and what are the prices of the goods that are sold, right? So in this section, the key term section, you can the same definition is explained in a summarized form. An invoice is a document issued by the supplier of goods on credit showing details, quantities and prices of goods supplied. Alright, sometimes the supplier allows the customer trade discount. So sometimes in your invoices you're going to have trade discount as well. So this is a reduction in the price of the goods, right? The rate of this discount often increases according to the quantity purchased. So basically we usually give trade discount to people who buy in bulk quantities from us, right? And it is also given to businesses in the same trade. Such businesses will not be prepared to pay the full rate, as they need to make a profit when they sell the goods. So you can also give a trade discount to someone in your own trade so that they can make a profit as well. And you can also allow trade discount to people who are buying in bulk from you. So basically trade discount is a discount which is only shown in your invoice and is not actually recorded in your accounting books, unlike cash discount. So cash discount is something that is basically recorded in your accounting books. So I'm going to obviously upload a separate video on the difference between a trade discount and a cash discount as well. Now, here is an example of an invoice. In the examinations, you could also have to outline the use of an invoice. You might also have to fill a pro forma document. So you might have something made like this, and you might have to fill in the details in that particular business document, right? So you should know how and what details is an invoice going to have. So usually the invoice is like this. Obviously, for different types of businesses, this can be different as well. This is just an example. So you have your invoice number, which is your bill number, and obviously it is an invoice, as the title says. This is basically the name and address of the seller. So if I'm selling the goods, obviously then this is my address and the name of the business. This is the name and the address of the buyer's business, right? So this is the person who I am issuing the invoice to, right? Then we have the date, and then you have the quantity of goods that are supplied, the description of the goods, the unit price, and then the total amount. So you see, in this case, I'm selling 30 meters and then 10 meters of cloth. So 30 meters fabric is a different type of a fabric. So this is B320 is the color code maybe, and then 10 meters is a different fabric with a different color code. So for the first type of cloth, the unit price is 15, and I'm selling 30 meters, so the total bill becomes 450. So your unit price is going to be multiplied by the quantity to get the total amount. Similarly, for the second fabric, I'm selling 10 meters and each meter costs 6, so the total price becomes 60. So you add these two together, and the total amount that the other person or CU and CU owes me is 510. But then I'm allowing them a 20% trade discount. So this discount is going to be applied on this figure. So you see 510 multiplied by 20% is going to give you 102. So that is why you can see that I gave them a discount of 102. Now their final bill is $408, right? This is what they owe me. This is what CU and CU owes me. You see, there are terms written in the invoice as well. 2.5% cash discount if account paid by 31st May, right? So these are the terms. So I'm selling them goods on 3rd April, and I have also decided terms with them that if they end up paying me this amount 408 by this date 31st May, then I'm going to give them a further 2.5% cash discount. Now they owe me 408, right? So that discount will be applicable on this figure. Okay, so this is how an invoice is made usually. There are two important points written at the bottom as well. The customer receives the original invoice, right? So if I'm issuing the invoice, then obviously CU, which is the customer for me, is going to receive the original invoice, and obviously they are going to use that to record the purchase of goods that they have made from me. The supplier, which in this case is me, I am going to keep a copy of this invoice, and then I'm going to use that copy to record the sales that I've made, right? So this is a simple format of how an invoice can be for a business. All right, I hope the video was helpful, and separate videos for each of the documents are going to be uploaded on the channel. Okay, thank you.